Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So candles can really give us a lot more information other than just looking at potential patterns. Truthfully, I find it very hard, and I've rarely traded off many of the candle patterns that I've even written about and that have been written. I think it's more important to use candles and we'll show you in just a minute, of some very important handful of candles and their meaning, but what the significance is after a condition has been met. In other words, it's important to identify trend or where the market's been, and again, it'll help you to figure out where the markets might go. What do I mean by that, folks? Simple. We're in a downtrend. The market's trading substantially lower, and all of a sudden you get a big, tall, green candle, which signifies that the close is greater than the open. It's an abnormally long-ranged candle. The real body, which is the term to define in candlestick the relationship between the open and the close, is abnormally longer than past bars, candles, open, close, or ranges, or real bodies. That would be considered a bullish engulfing pattern and has a lot more significance to it than, say, a bullish engulfing pattern after the market's been in an uptrend. So identifying the location and the condition of what preceded these candles, that's also what's important. We need to uncover and understand as traders what this relationship between open and close of the real body really means, understand why the real body's color is important, and also, one of the words here, the shadows, and also the shadows and the correlations to the overall candle's body. What are the size of the shadows? What's the range or the length of the candle? All of this gives us immediate identification of the market's current environment and the market participants' what we call acceptance or rejection at or near a support or resistance level, and it helps us in a clear visual manner. And that's what can help us to really pinpoint turn or reversal signals in the marketplace. Now here are some very popular and more reliable candle patterns that I utilize. One, of course, after long uptrends as a downward reversal pattern is what we call the evening doji star. Now, I have many different patterns and some proprietary ones. Some of you might be familiar with the low close doji here. And because evening stars weren't that, well, to be honest with you, they didn't form often. But we would see many times, we would see dojis, and we would see this, what we call the low close doji show. The opposite is after a long downtrend, we get the morning doji star pattern, and that would be a bullish reversal. And once again, this we also have what we call the high close doji. And many people who know my work, this is one that has been, I mean, it's almost a bread and butter trade that I utilize for looking for major reversals against pivot supports. If we get this pattern, a high close doji, at or near pivot support, this is a go pattern, meaning we look to buy on the close or the next time period's open, and we place stops below the low of the doji, or in addition to that, below the low of the doji and the pivot support, and that would be our entry and our stop order initially. Obviously, as the market starts to move up, you have to manage your risk. If you're using options, this is a very powerful trigger to get long and look to buy call options as you see that the market finally closes above the high of the doji, that's our trigger to go with a long position. If you had pivot analysis, which helped you to predict what the potential low was and what the potential high is, you could therefore say, well, if this is my potential high and the market's down here where I'm buying, that gives me a lot of wiggle room for profiting when my risk is potentially down here at this level. Now you can understand where using pivots with candles can help you, A, enter the trade at the right time. And that timing, folks, if you're an options trader, you know as well as I do, timing is everything. Time is money. With that, instead of getting into the trade too early and then watching the value of your options, if you're a long directional call option, or maybe perhaps you're taking strategies that are less aggressive like a credit put spread, this will enable you to potentially profit a little bit better by establishing the position at a more opportune time. In addition, by looking at that pivot support and by having pivot resistance, you're now able to better calculate what your profit objective is. We know what our risk is. Now let's figure what our profit objective is. You can always change your profit objective under market conditional changes. You can always do other types of strategies like leg out. You can actually leg into a spread. There's many different strategies you can do to protect profits once you have them. I think the key is by understanding, give me a target area of what the market can get to. It's going to help you as a trader, especially using these foreign currency products through ISE. And because of the fact that we're having such dynamic moves in the foreign currencies, this is a really valuable way of using a better analytical tool for making these trade decisions. So with that said, I like to see some of the patterns that I had mentioned, the low closed doji, the high closed doji.
Hey, John.
Steve?
Hey, John. Yeah, we're looking at a different screen now. Somehow I think you must have hit the button or whatever. I'm just looking at my WebEx meetings. I'm not sure what I'm seeing here.
Well, I'm sitting here on the WebEx 12. I'm on page 12.
Okay, let's see if everybody else. Candles pattern. Is everybody okay on this?
Candle
Okay,
patterns,
good,
no.
we're good. All right, perfect. Sorry, John. Looks like everybody says it's good. Some say that they can't see the candles. Can everybody see the candles themselves? Page 12, and see you can see them. Okay. Go ahead, John. Thanks.
Okay. The other candle that I like is obviously hammers, and as I mentioned earlier, bullish engulfing. So some of the candles that are out there have better significance than others and have a higher percentage of reliability. I think in one of the second books that I wrote about, we did a back test study on a lot of different patterns and the reliability, and we actually ran back test studies, which I'm so happy that the ISE has pricing on the euro currency index in conforming with, that was tough for me to say, with conforming with the spot currency. So it's easier to track because in the second book, especially for day traders, you may be interested to know that in the euro currency, approximately 41% of the time on a 15-minute basis, so on an intraday basis, 41% of the time, the actual low of the day is formed by a hammer. So I'm going to write that statistic down so you have it. 41% of the time, the low of the day is formed by the hammer.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.